Hey, what it is, Royal Blu FX fam. Welcome back to Royal Blu FX, to another video. In fact, today we're going to talk about the trades that we've taken today. This is going to be a trade recap video. So, however, please stay into this whole video, watch this whole video, because you're going to find some very highly educational tips and tricks that we're going to talk about in this video, even though this is just a trade recap video. So first things first, I always trade the New York session. I always start on the 30-minute time frame, and a lot of the times I do trade above the 4-hour, or at least I look at the 4-hour and the daily sometimes. So the point here is, how am I catching these trades, right? The way I do this is simply supply and demand, PLT, PHTs, and reaction points, which are essentially just supply and demand. So there's two types of reaction points, or two types of supply and demands, or actually three, to be honest. First, you have your general supply and demand, which is, higher highs, higher lows, something like this, right? Very easy to see and very easy to spot. And then we have what we call a reaction point, which means when price starts to reverse, something like this, okay, prices are going bearish, you'll see that each low, like for example here where this demand zone pushed bullish, right? This demand right here pushed bullish, then price came down to the demand, right? Respected, then failed. So this would be called a reaction point. When prices are going bearish now, every low should, in theory, be swept and or respected a little bit, and then respected and then swept, right? So now everything becomes a reaction point in the market, just like this. So you have right here, right, this demand zone, it went buy to sell. Then we had another one, buy to sell, right? And so that's the second one. The third one essentially is the very first one, which is called a flip zone, which a lot of you may know what it is. But in a nutshell, a flip zone is just where prices flip from a reversal point. So if this high here was a supply zone, okay, and prices start to go bearish, right? We're anticipating the price goes bearish. We need to wait for price to break this chalk, the first low here, and then you can spot your buy to sell, which is essentially a flip zone, which begins at the very beginning point of the reversal. Okay, and so that's a flip. So the flips are very important because that is the very first part of the move that essentially tells us that there were weak buyers that came into play, and then all of a sudden sellers took over. So that's the three main types of supply and demands. Remember, supply and demand is just, in general, is a higher high, higher low, right? That price mitigates either a high or a low, right? And then we have the two other reaction points, which are essentially a supply and demand. Okay, so if we look at this here, we're on a 30-minute. You can see I'm going to go back all the way to where price, the market actually opened at 6:30. Let's go right there, 6:30. Okay, we're going to take that out, and you're going to see why I sold here. There was a lot of people that were actually buying here, but right, I don't trade when price. I don't trade when price or the New York hasn't opened just yet. I trade it right when price opens, and so anyway. Right over here you can see, let's go on the 4 hours so you guys get a focal point on what's actually happening here. This right here is actually a reaction point on the daily time frame. If I go on the daily right over here, zoom out a little bit, you can see there's a supply zone, right? So then we have this reaction point right over here, and then once we have this huge reaction point, okay, I was actually anticipating the price would come back down here today, but it didn't, which is totally fine because I'm essentially going from the higher time frame all the way down to the 1 minute to catch the very first move of the day, which a lot of you may not actually even like to do that, but in any case, I'm a fan of just intraday trading and getting in and out of trades as soon as possible, but playing structure with supply and demand correctly. So now that we're on a 30-minute here, right, and then you guys can see that's my demand zone here. Right over here, we're at the very high, right? Very high. That would be our premium. This would be our discount. If I go all the way down now to the 3-minute, right over here, you guys can clearly see that we had price from this demand zone. Price went high. From this high, price went low, right? And we were just nearing this flip. Now this is a flip here, the flip that I was telling you guys about, right? When price breaks a chalk, right? You see where your buy to sell candle is, and it's literally right there, right? So this is our flip zone. So what made me anticipate this would be a sell here is because of the pure nature of what price is doing here. When you see price has been going bearish here on the 3 minute, you can see there's your chalk right here, right? Now this is a type of flip, which is also a reaction point right here. Okay, and then we had another reaction point right here, which means now I'm still selling. Now a lot of other traders have been thinking, well, hey, this is a demand zone, we have to be buying here, which is true in some cases, but it's not to me, because prices from this high here have violated every low here, right? It's broken every low, even this low, right? And so now from this point on, I'm thinking, okay, this is my supply zone, I need to be selling here. So what do? I go all the way down to 1 minute. I'm actually waiting for the 1 minute, right? And I'm literally watching when price starts to open up. And as soon as you know, right, price just opens like this. This is 6:30 right there. You can see where my crosshairs are right there. It says 6:30 a.m. That's New York time, right? I enter here and I have TP in mind. Now notice that there isn't really an area like exactly where price should be going, but when I went on the higher time frame, I noticed that there was a bunch of liquidity here sitting right here. Look at all this buy. This is all liquidity, right? Everything that was mitigated. So I noticed that price had to sweep all this, and so I came over here, right, and I entered there to TP the liquidity, or at least to hit the liquidity, right? Boom, and that's where we actually ended. I don't know why that was there, but it was right here, just right there. Right, and so once that has happened, I was out. Right now, what I'm doing here specifically is following order flow. I'm not following, your perfect sort of structure, your perfect breaks, and even though breaks of structures are great, and I follow those. However, I don't follow it to heart. A lot of you guys are anticipating and looking for bigger structure to break like this, right, and then waiting for price to get up here eventually for maybe price to sell off. But what I will tell you is on the next video on YouTube is how to properly do structure, how to anticipate the internal structure, how to look at the internal structure versus the major structure, main high, main low, okay, and how to understand that prices should be going bearish here instead of bullish, right? So anyway, we caught this trade here, we hit a good TP, right, and then from there I was just getting ready for the day, obviously for the morning. I was not on a computer, otherwise I would have been buying here. I've been looking for buys. But let's speed up all the way here. I'm going to show you why I'm selling here. And this is probably when I was making breakfast right over here. So let's go here. Okay, so obviously we see a supply zone. This is our extreme supply zone, right? We can see there's a high, there's a low, price broke the structure, price got here. Now a lot of traders might be looking at this as, oh, this is a bearish sell like this, right? However, again, I'm just intraday trading. I'm only looking for the reaction points. You can see price was going bullish for some time. You can see where price did actually react to the supply zone. There's a supply zone, there's another supply. There were failed sellers, prices went bullish. And then I knew that prices were mitigating here fully, right? We actually looked at this area and we said, okay, that's our 50% EQ right there. As you see, it hit the EQ. I wasn't here at that time, but I was all the way down here when price was ready to sell off. So I went down on my seconds time frame. I don't require everybody to actually trade the seconds because they can be very, noisy, just like this. And it's, you need to use this line chart sometimes. Anyway, so right here you can see we had a demand zone, right here. Prices went up, sold off, so this is a reaction point based on this demand zone. Prices broke this new low, as you see right here, right, and came back to my zone and then continued to sell off. So this is what I was looking to do. I was looking to take advantage of the internal structure that you see in here. It's kind of hard. Let me show you here. There's your internal structure in here. High, low, low, high, right? Price broke a new low, so we're waiting for price to get back to there to continue bearish. And so this is why I was selling here. Now I know some of you guys will say, yeah, but it didn't mitigate. Well, trust me, it mitigated on my MetaTrader TradingView sometimes doesn't show you everything, but on my MetaTrader, it showed that we mitigated, so I sold there. All right, so I look to TP this low here and get out there for 5.6%, right there, 5.6%, right? And then price continued to go bearish here, breaking this low, and then it came down to this demand zone. Now this is also another, I believe it was another reaction point. It is a reaction point right there, right? So if you span that across, you'll see there's supply. There's more supply there. Actually, this supply actually broke this high. So this is actually not a reaction point anymore. It's just a break of structure because this high here exceeded over this high. Therefore, it's just a random low. Okay, let's continue here. So we have a bunch of liquidity sitting here. Prices tap this demand zone here. So what I was looking for, I was actually anticipating looking for buys here. And the reason for that is because you can see that we have a low, a high, and a low here, and another high. There's a lot of liquidity here, so I'm anticipating for price to actually go bullish here. And then I had my supply zone here ready because this was a reaction point. Again, prices were bullish, prices sold off. This was the last sell before the break of structure has happened, so that is where I'm looking to waiting to see if prices can take off, right? Prices took off like this. All right, came here. I don't see anything in here. I'm not buying here. A lot of people, a lot of traders will see, yeah, that's a chalk. You enter here, right? Of course, sure, that's fine. I don't do that. This is there's two types of chalks that I look at. There's this chalk. So we got that when prices are going bearish like this, you got that chalk like this, right, where prices just show complete imbalance like this. Prices come to a demand zone, right, and then go off, right? And that, to me, I don't really trade that, but what I do trade is the flips when I see something like this, just like this, okay? Prices break the chalk, right? We have a sell, a failed sell, turned into a buy all of a sudden. You can see that banks were involved right in this impulse here and then mitigated this demand zone to continue. So this is where I'm really interested in seeing all the time. But if I don't see this and I see this instead, then that means I'm not buying here yet because there's still anticipation that sellers here could continue bearish, which means, let me just go back here, which means if prices came here to the demand zone, people are buying, there you go, you got a failed buy, right? Which means this is a flip now, which means prices will come here and then continue bearish like this. So that's why I don't do that. What I would do supposedly here is when price does another break of structure just like this, and we see that this high actually failed to break the low, becomes the flip now, and then I wait for price to get back for the buy. That's what I would do because now we see proper order flow pushing bullish like this. Okay, so that's what I would do here. And so that's why when you see this here, this is just an imbalanced break of structure like this, chalk chalk, right, chalk chalk. People are buying here. I'm not buying right now because easily price can push up and continue bearish, and we don't want to be caught into any of that stuff. So notice how price comes back below again. It actually doesn't respect here. Actually, it does respect this though. We continue bullish, and I'm starting to restructure in here. You can see quite clearly that we had a high that failed to break this low, and then prices broke a new high here. And I can see that now we're just playing off of reaction points. You can see there's the last sell to buy, and this is where I'm waiting for price to get back to reach this high right there. So once price got there, we entered quite right away, and only targeting this high specifically because this is our next supply zone. We did have a break of structure here, a chalk to say the least, right? This is a type of flip in here, and I'm anticipating for price to actually fall bearish here. And this is the only trades that I took today so far, which was the Tuesday. I believe it's Tuesday. Let me see what the date is. Tuesday, the 12th. Okay, so check this out, guys. If you guys are questioning me about the trades. Anyway, I hope this was an educational video that helped you guys out on what I was doing and what I'm seeing in here clearly. If you guys like this video, please throw a thumbs up on the video, obviously, and if you have any questions, please comment below. I always answer. Until then, guys, I will see you in the next.